My name is Tony Laporte. I started on the floor of the Chicago Mercantile Exchange in 1979. Ended up by June. I started in January. By June, I was working in the gold pit, and my boss said to me one day, "Hey, Laporta, this is one of your Goombas. His name is Rick Santelli. Train him." And Rick and I have a little bit of history. I was on the floor, I don't know, about 3-4 years ago with Danny, and we walked around. We saw Rick and had a good laugh. But back a couple 3-4 years ago, Rick and I were talking about the currencies a lot, and Danny fancied me as a currency trader. Well, as it turned out, I mean, I actually worked in Chicago for a limited amount of time, but I traded on the floor of the Life Exchange, where I traded bonds, bunds, gilts, and a little bit of footsie. So Danny wanted me to come on here this morning and talk about talk about a currency trade. Oh, here's his picture back. And so if I don't know if anyone can slide to one of my slides, I've got a monthly dollar index chart there. That's the euro dollar. Yeah, there we go. If you see down there where it says 90.66.5 to 90.80, that's a gap from about, I don't know, what is that, 2015 to end of 14, 2015. And that's a gap that's been left unfilled. And my whole thought process with this is similar to the gap that we had back in around 2012 on the Japanese yen monthly chart. There was a gap at that time around 88.87 up to 88.90. And the yen was trading, you know, low 80s, 80, 81 something. And I always thought that gap would never get filled. And then what has the yen traded up to the last couple of years? It traded up to like 100 plus. You know, the gap was easily filled. And I think this is the same thing. And this is a legitimate head and shoulders bottom here with an objective of 106. We got close, 104 and change. But we never, most head and shoulder formations have some sort of return to the neckline, and we never got a return. And I think we're going to get that return. And one of the reasons I do is being long the dollar is the most crowded trade on the board. And speaking from a fundamental side, you know, everyone would say, well, wait a minute, the Americans are raising interest rates, so that should be dollar positive. And yes, it is. But what do they have in Europe? They have negative interest rates. So when they start jacking their rates up, they have to go up further than US rates will go, and that'll be a euro positive, dollar negative, in my opinion. I do believe that we're going to, and you know, we have French elections here in April, and then we have German elections in the fall. And if everyone's worried about Marine Le Pen, and if they can keep Le Pen out, rumor has it that, you know, Draghi will throw Merkel a bone because, you know, the savers in Germany aren't earning any money on their money in the bank. And Draghi will throw Merkel a bone and start jacking up rates to get them out of the negative anyhow. So savers in Germany will be pleased. Merkel could get reelected, or it will help with Merkel getting reelected, and we move on. So I'm thinking this dollar is going to, on the back of a stronger euro. And the euro is 50, and the dollar index is 57% euro. So I'm believing that euro strength will result in dollar weakness, and we go down and fill that gap. As you can see from this head and shoulder formation, the breakout level is 85.75, and that's where I think we could get to. So I see Danny's back on. So Danny, if you want to take it away, I sent this link out to a lot of my clients, like close to 150 of my clients. And I'll just introduce Danny to you real quick. When you hear me write about Don't Fade City Hall, that's Danny Riley. When you hear me write about the pit bull low, I learned that from Danny Riley. Danny started on the floor of the Mercantile Exchange, I think a year before I did, and worked on the side of the S&P pit since the day it was opened. Danny, in my opinion, and he's not a chartist, and he admits to not being a chartist, Danny can read a market. He's one of the best S&P traders I've ever been around. So take it away, Danny.
All right, can you guys hear me now? Testing, 1, 2, 3. Hey, everybody. What's up, everybody? Little technical difficulties, of course, which we shouldn't have. Hey, JC, can you get the charts up? Okay. All right, so anyways, you would say, how could that be happening? How could MrTopStep not have his shit together to get this thing done without any glitches? We had tested everything out at 9:30 in the morning. Everybody could hear each other. Everything worked. But then what? Murphy's Law, right? Riley's Law. So anyways, listen, I got a little thing I want to say before I start out the presentation today. First, I want to thank all the MrTopStep crew, Chicago, Florida, everywhere, and the followers for attending today's webinar. We put a lot of time and thought into this, and you know, I think you guys will agree. There's a lot going on here. There's a lot of moving parts, whether it be Donald Trump, the economy, just the S&P, where it's going up and down, interest rates, and what we're going to try to do is we're going to try to cover some of that. I want to remind everybody before we start that these are not our father's markets. In no way, shape, or form are we making any promises that you or I are going to make a dime doing this. Now, I'm going to get into this right away. No problem, you guys. I'm going to try to move this over a little bit. This is not ideal for me right now, the way this is set up. But anyways, let's move this forward. You know, one of the things about being a trader is that we're graded all the time. Our P&L, our profit and loss statement is our grades. That's our report card. And when you're a public figure and you go on TV and you make recommendations or you give your opinion about, giving the public opinion about buying and selling options, futures, stocks, whatever it is, I think you got to do that in a kind of a guarded way. I think it's got to be something that you believe in. And for some market timers out there, I'm not quite sure what they do or how they even exist in this environment. Now, in the beginning of this, the reason I'm doing this is because I often talk about the market timers, and I'm going to be doing an interview with Bert Dolman. I think Bert Dolman, if you've never heard of Bert Dolman, I think Bert Dolman is one of the premier market timers out there. And what I've always come to know is that Bert has been around a long time. He doesn't make outlandish calls. He's not jumping on CNBC. He's not doing all this kind of stuff that Dennis Garthman does. And at the end of the day, I remember this story. This story came out on Barron's, I think, in January, and Garthman jumped all over this story about the bullishness in stocks and the Trump administration and being long the stock market. But as what we've always seen is that Dennis Garthman, and I'm going to pick on him in particular because he seems to be the one that people look at this stuff the most for. This kind of get long crude oil at $54 and $53. What was he doing? What was he looking at back then? What research is it that gives you these signals to get long or short so far into a move? Well, this last story, this last one, what came out on Friday, I think, and this is when I put this slide together, that Garthman sees no other choice but to be bullish equities. In January, he's no longer bullish, but in March, there's nowhere else to go but equities. And I think this is a really, really stupid type stuff. And again, I always talk about this, that if you're paying for a subscription like that, I think that there ought to be a refund part of that, because that stuff has no place in the markets. But anyways, let me move on here, guys. I mean, do you agree with me on this kind of stuff? I think they say that there's even an algo that they're writing to fade his calls, and that's pretty embarrassing. But anyways, I'm going to go through these slides kind of quickly because we've got a lot of them, and I want to thank Tony for coming in. Tony, you're a great guy for stepping in, because the way this should work is when everybody's in tune, it doesn't matter if I'm here for 10 minutes or I can't get on for 5 minutes, because somebody else, they're good enough, they're smart enough that they can just jump right in. And that was Tony. And thank you, Tony. Anyways, I think what's happened here is with all this algorithmic trading, that everything revolves around macro economic events or just events. And what we've all been, as traders, what we're all geared to do is to trade into these things. Now, there was a famous trader, his name was Ed Seykota. And Ed Seykota used to say that you're supposed to trade up to the event, not the event. But that's not how it works. We know that that's not how it works, because traders tend to they build this stuff up and they want to get involved. They want to trade into this stuff. They want to trade right into it. Now, what I've noticed over the last several years, and this just isn't one example, but a couple of examples, is that everything seems to be event driven. In this case, it was Brexit. Remember limit down and Brexit? And I've always talked about this. Limit down, anytime you see a limit down move, and throughout my career, even on the trading floor, I would say that 80% of the time when the S&P goes limit down, even if it's limit offer, even if there's hundreds and hundreds of contracts offered, by the time it reopens or it goes bid, that the futures always go flying back up. So in Brexit, what I saw was an early move down, a sharp move up after the limit down move, and then we continued to go higher. Now I don't see where all my stats are on this, but I listed out some stats, and they're not at the bottom of my cursor here. But anyways, and then the next event. Again, I can't see you guys, my guys in Chicago. I can't see the bottom of this, so I can't see any of my notes. But I know this stuff well enough. The night of another event-driven sell-off was the election night. And November 8th, the S&P got down to a low of 20.28.5, and then just smoked up to 24.01. Everything's about the mindset about this is that everybody wants to sell these events. But in reality, these events always turn out to be buys. Remember August 15th or August 24th of 2015 when the Dow opened down 1,000 points and the VIX and everything looked horrible? What happened? The S&Ps go limit down. What happened? The S&Ps go flying back up. There's something about these events that get people short into them, and then the institutions and the algorithmic trading programs and HFT and program trading all come piling back in. And that's why these short covering rallies are so severe. The algorithms sense that the S&P has run out of selling pressure. Once that occurs, they just do a gigantic flip-flop and then just start doing the same thing that they did on the downside, chasing stops, running sell programs, running everything to buying everything back up on the upside. We saw that last week. And I'm sorry I can't see my notes. It's kind of distracting. And then this most latest thing, another event-driven sell-off. the Donald Trump, I don't know, Obamacare replacement, Obamacare blow up. You know, look, at the end of the day, I think Donald Trump did the right thing. You may like him, you may dislike him, but at the end of the day, pulling that bill was smart. He probably should have been a little bit smarter going into that and tackled taxes, tackled infrastructure, but at the same time, he was going forward with a lot of his campaign promise. And again, I'm one that thinks he was going a little too fast. But that said, that was another event-driven sell-off where there was a big rally that pursued. Okay. The Trump rally, and what do we expect for the Dow? And the Dow has its, remember, it was only about a week and a half ago, that they were talking about the largest Dow losing streak since November of 2011. Well, you know, that week, the week of the vote, or the canceled vote, the total loss for the Dow was the biggest drop. I can't remember exactly in my notes. A 2-week decline, 1.4% decline over 2 weeks. That's not a big decline. That's not like a thrashing big sell-off. And we never really did get that. We got that weakness on Friday. Then we got the hangover. We had the weakness on Friday, and then we had the short covering rally going into the weekend. And then we got Asia and Europe down over the weekend, or overnight on Sunday night. And that dragged the S&P down to 2318 and Globex. I bought 2320s. I didn't hold on to them very long, but that was not that hard to figure out. I was even going out on Twitter. I was telling people, you don't want to sell them here. The algos have already sold down. We've already hit sell stops. When the futures open up, the first thing that's going to happen is that there's going to be a buy program. They're going to chase some of these stops out. Now, I'll admit, I didn't know that the S&P was going to rally so quickly, but at the end of the day, I think all this stuff is just, we as the public are led to believe that everything is going to be a negative, and what happens is it ends up to be a positive for stocks. How it works like that, I know it's got a lot to do with the economy, but it's just the way the overall price action works. We get led into thinking that there's a sell-off coming. Maybe it does come, maybe it doesn't come, but ultimately, there's always a bigger rally that ensues. And also, you know, the other part about this, again, people may not like Donald Trump, but you can't argue with the numbers. He's added, since he's taken office, he's added $3 trillion in market cap to the stock market. So, you know, at the end of the day, audio keeps cutting out. You guys, the audio's working all right, right? Great. Now we're going to get to this. Now, I don't want to see anybody leave here because, you know, let me explain something. I wanted to do the introduction. Maybe we can get Tony to come back in a little bit. But after I do some slides, WB is going to come in and do some slides. Marlon, Mr. Mim's going to come in and do some slides. I'm going to come back and talk about, I got a couple charts I want to show, and then I'm going to make you guys the offer. And the offer is a solid one. Okay, so let's see. Let's get to the next slide. I'm sorry about this, you guys. You know, we always, because I'm an S&P guy, so I'm always thinking about the S&Ps. My secondary market I look at is crude oil. I love crude oil. S&Ps and crude. They're the two most toxic futures that you can trade. But beyond that, and what's beyond all of this, is what's going on in the bond market. And it's been giving really a lot of mixed signals. And what I kind of think is happening is, you know, is the yield curve steepened. It means, you know, as it steepened, the economy got better, and as the economy got better, the Fed's been, you know, the Fed is, and Tony and I talk about this all the time. He continues to remind me, you can't fight the Fed. And that's what this is all about. This is about money flows, and this is about the Federal Reserve and how interest rates are going to be pushed up over the next couple of years. Now, the big thing was that, you know, I said this, and right after that last Fed meeting, despite Janet Yellen saying that there's only 3 rate hikes coming in 2017. I said that there was 4. I think that there'll be 4 rate hikes in 2017. I don't think there's a reason not to. But that said, this all is the yield curve steepens and the economy gets better. There's a mindset out there that possibly they won't jack rates as quickly. I tend to think that they are going to do 4 rate cuts. They're going to do 4 rate hikes this year. I don't see how they can't. They were behind the curve and sitting there waiting and kind of hesitating, something that they've already done, the Fed. I think it's a big mistake. It's time to get caught up with this. Let the markets level off. If the S&P has to sell off to adjust to higher rates, let it sell off. The market will go back up once it's done. We've seen this before. The GOP failing to pass the bill represents a setback for Donald Trump and his legislative agenda. I agree with that. But you know what? I also know that this trade that's been going on, this buy stocks, the Donald Trump trade, the buy stocks, buy dollar, and sell treasuries, there's going to be an unwind at some point in some of this stuff. And I don't think that it's unnatural that after the big rally that we had in the S&P, that you got a 80 handle pullback. I mean, 82 handle, 83 handle pullback. That was not a severe pullback. So when you kind of look at this, I still think that the way this is going to end up is that while Trump refocuses, he will come back to this health care bill. They will eventually. Obamacare, I'm a lucky person. I don't have to have that. But I do know that it's crumbling all over the place, and I think that probably would have been smart politics or smarter politics just to let the thing crumble. Because you know what? At some point, it's going to crumble on its own. There's several states in the United States that are down to one insurance company. It's just not working. But anyways, short-term rates, yep. They're going to go up way faster. I agree, Haley, 100%. But let's kind of move this along a little bit, you guys. Then last week, Federal Reserve Evans came out, and he's saying that he thinks there'll only be 3 hikes in 2017. But that's old news. You know what the thing is? I think that the way this is working right now is that the Fed is on path to continue to raise interest rates. And even Tony and I discussed this. There's been times when they've raised interest rates intermeeting. And if the economy keeps heating up the way it's heating up, I think it would be irresponsible to do 3 rate hikes in 2017. Don't worry about foreclosures. The Fed will buy it all. Yeah, they will. You're right. No doubt about it. No doubt about it. Now, this is an interesting news story, and I don't have my link. I had links down at the bottom here, and I can't seem to find them. But anyways, Reuters wrote a program that revolves around picking off an algorithm that revolves around picking off good and bad news stories. And this is the type of stuff that I think is really, really driving the market. There's all sorts of algorithmic trading programs and HFT trading programs, but these particular algorithms are really, really I think that these are the most disruptive programs that are out there. And Garthman News, short oil from Garthman. Well, he'll get something right sooner or later. But anyways, in the world of algorithmic and program trading, I think that what's happened here is the markets have just been flooded with this stuff. And one of the stories that I'm going to pull up, and what we'll do is I will make sure that I put up all the links for all these stories when we send out a copy of the video. We'll send a copy of the video. I'll have John and I will go back in. We'll make sure that you get all the links to all these stories. But this is a very interesting story, and it's not just Reuters that's doing this. Bloomberg's been doing this for a while. A lot of these other big news providers have written algorithms for their news, and I'd love coffee in Iraq. Yeah. But anyways, this is the type of stuff that I think we're up against. You know, you're never going to get the news quicker than Reuters. And when they have programs that are built around this stuff, you know, it used to be we'd see a headline on a screen on the trading floor, and you would trade off that headline. But now, even if you could see a headline, yep, most of them are fake, Leon. You're right. But now, in order to get these headlines, you're just being pushed into we're just like a herd of cattle. Everybody's getting pushed in, and then this big company that gets to pay for higher speed gets to jump in front of our stuff and sell the stuff before we get to do it. And that's where I think that's pretty unfair. But anyways, let me jump ahead here. Okay, here's some of the story. The tool is known as Reuters News Tracer. It was developed over the last 2 years. It analyzes tweets in real time and filters out spam and grouping similar tweets into clusters based on similar words. Oh, man. The tool then classifies the clusters into topics and generates short summaries about each one. I mean, how can, I got to ask you something. The Pitbull says this all the time. How is it that we're expected to compete against something like that? How can we fight something like that? I think it's got a lot to do with timing. You got to be so patient. On Friday, I mean, I admit I've had some rough trading days over the last couple of months. But on Friday, I actually caught the lows. I got long. I made money on the long side. Then the S&P went up. I got short, and I caught both ends of it. And for that, I thank the algorithms once that happened. But I was also like 2 ticks away from getting stopped out on the high of the day. 2 ticks. I moved my stop up by 1 tick because I didn't want to go any further. And then the S&P sold off. I never got stopped out. But all I could think of is like, how is this algo not going to knock out these stops above the figure, hit out my stop, and then reverse? Well, it never did. So anyways, this is interesting stuff, and I'm going to make sure that you guys get the links. And here's another story. This is a news story. This isn't just something that I pulled out of there. But they say that the Trump tweets are driving day traders. And I think they are. I think that a lot of this stuff, I mean, I can't speak for you guys, but a lot of times I don't turn on the news. I don't watch CNBC. But now that Donald Trump is tweeting all the time and going on TV, I watch his stuff because I believe, I don't know, how much of this do you give, how much of the rally do you give credit for the economy or Donald Trump? I think it's both. I really do. At times, I think the economy overpowers Trump, and at other times, I think Trump overpowers, the economy on these types of tweets and this kind of blasting out kind of informational stuff that goes out all the time. It's just not like it used to be. I mean, you got to be so patient. You've got to have your level right. You've got to be committed. You've got to own your trade. But I do believe one thing. I really believe that he's been good for day traders. These have been good trading markets in my mind. Love the Trump tweets. Bypass the fake news. Tax cuts good. That rip. Exactly. Trump tweets. Yeah, here it is. Here's the story about it. It says presidentially active Twitter presence has lifted volatility in financial markets. It has. I mean, we're all sitting in these quiet markets where they're just kind of drop a little bit, then trend higher, drop a little bit, then trend higher. We're always looking for news. And really, there's no doubt about it. Trump provides daily headline news every day. I mean, it's amazing. And I don't think it's going to stop. So therefore, I think as traders and I admit I've had a couple opportunities lately where I didn't take them, but I think there's just going to be a lot of trading opportunities here. Well, more than we've seen in a long time. But again, what I'm going to do is I'm going to make sure that you guys get these slides, and we'll put the links so you can read the stories. Let's see. Okay. So did Tony do both slides, you guys? I wasn't able to hear Tony. Did he do both slides? No. Okay. All right. Well, then what we're going to do is we're going to turn it over to my man, Tony. Okay. And how we're going to do this is Tony Laporta. We're going to let him come in and talk a little bit. He's got 2 slides. Then we're going to have WB, William Blunt, come in, and he's going to talk. He's got 4 charts, and I got to ask everybody to please keep it down to 10, 12 minutes, because we've got Marlon after that. He's going to come out. And before I do, I want to say one thing. I want to say hats off to the guys in my forum, because on Friday, everybody in my forum kept hitting me up and asking me about, do they do a walkaway trade? Do they do a walkaway trade? Well, you know what? If there was ever a time to have the MIM and be watching what was going on, because we always talk about the walkaway trade. It worked exactly. And if you had the MIM flip goes to 1.4 billion for sale. Down go the S&Ps. It's all part of that rebalancing that we were talking about earlier in the week. Sorry, I keep looking at the wrong way. But we're going to bring in Marlon. I hope he's ready to talk about that. He's got some slides, and we're going to talk a little bit about MOCs. Then I'm going to come back. I've got 3 charts, and then I'm going to make my offer, and it's going to be an offer that I hope you can't refuse. Tony, can you got it from here? Can everybody hear Tony?
Everyone, this is Tony Laporta. Who's ever in charge of the slides, put on the next slide. The Eurodollar slide, GEM 17. There we go. Anyhow, Danny's touched briefly. Him and I do talk quite a bit, and when Danny loses his way, that's the great thing about Danny is, you know what? Well, none of us get it right, and when Danny gets it wrong, he says, you know what? I got it wrong. I'm a dickhead. Let's move on. And I give a trader like that a lot of respect. But we do. What I learned from Danny is don't fade City Hall. And we got our first. And what I've learned from being in the markets 38 years, Wall Street has always loved low interest rates. And as my readers know, I don't know how many times I beat on the desk. What have we had since 2008? We haven't had low interest rates. We've had historically low interest rates. Should I try putting on a headset and maybe that would be a little bit better for the volume? All right. Hey, you guys can hear me. All right, we're going to get Tony back. Is William Blunt around? Is William? Hey, William, can you come in here?
Yeah, sure. How'd you to hear me?
Okay.
You can't. I don't really. Look,
Hold on, WB.
All right.
All right. Hey, Tony, if you can hear me, Tony, turn off your volume, and then I'm going to turn off my volume, and then we'll let WB come in and talk.
Wrong slide.
All right.
Put up the weekly with the red box from February. All right, or bring Tony back in. It's just Ross. Come on. Which slide do you want? Not that one. The one that goes back to February 2006. Nope, another one. There you go. All right. Real quick, and if y'all want the audio, that'll be fine too. Here we go. The thing I'm going to say said the first week. Everything I'm talking about was handed to the TS crowd February 8th, 2017, reiterated on April 18th, 2017, and confirmed election. And
Hey, WB.
go ahead.
WB. Listen, no,
I can hear.
we can hear you, but we can't. No, we can't hear you. Are you talking into a headset?
Yeah.
Oh man. Okay. Well, you got to talk a little bit clearer into it. It's because nobody can hear you.
Well, nobody could hear you for a while. Nobody could hear Tony either. I mean, I'm doing the best I can. Talking right into my microphone. I've got everything going on. Can you hear me? All right. Look, we're in a bull market. We've been in a bull market. As the chart that they have on the screen says, no hope of a bear market. Once we went through 1934, 44, that was given to everybody at S in 2000, the first 2000. Anything else until we price it could still be the ban against the 2007, 2009 drop. All right. Back in February, in large red room 4 low, and that the commentary is February 2006, and that's our. We're going to head to that red rectangle, regardless of what anybody thought, as long as we touch 2007 before taking that price out. That 2007 on the 70 chart, and well, all right, everybody's telling me getting this. Look, uh, we're in a bull market. It's going to blow off, and we're right where we're supposed to be. Here, y'all can read stuff. This was given to everybody at PS last Monday before the opening. All right, now I'm gonna post it into this room. Right there, I do. There you go. Now, last week we closed on Friday at 23.43. The Bulls needed to retake 23.57. The Bears needed to drop it down to 21.50. We did. We reversed. Then everybody was handed these posts in real time on that same day. And here they are. I think. All right. Here you go. These are in standard time. This is what the room is real time. And there you go. All right. Those are the real time posts. When we came back through 23.50, the only leg the Bears had to stand on was not letting price get above 32 to 33. And everybody had that in several weeks ago. Once we went through, everything switched to this is where we go. 27 commentary, a lot of highlighting on the February close. which was 23.63.70 something. 23.60. That 23.64, which also shows up on the 78-minute chart, has been a major promise that was given in advance as soon as we cross 20.
Hey, WB. Hey, WB.
Yeah.
Hey, WB. Listen, nobody can hear you. The volume is just too fucked up.
Well,
I know.
I guess you got to get the technology fixed.
Well, then here, we're going to have to come back. We'll have to do this, if everybody can hear me and they can't hear you guys, then we're just going to have to come back and do this another day. I mean, we thought we tested the sound and everything worked fine, and now all of a sudden the sound's not working. So I don't want to cut you off, but I mean, I don't think it's working out real well. WB?
I just said fine with me.
Okay, sorry about that.
Look, everybody's been having sound problems here from 30 minutes before the thing started to right now. Tony's been cut off. I've been cut off. You've been cut off. We need to get this thing ironed out.
Well, I mean, we did. We tested this thing at 9:45. We've been on since 7 o'clock in the morning. So I don't know what happened. But we got a little bit of a snafu. So we'll have to come back. What we'll do, WB, is we'll make sure that everybody gets the charts, and we'll make sure that they've got your email so that they can ask you questions. Is that a better idea?
You're going to give people my email address?
Well, that's up to you.
No, I do not want them having my email address. Nor do I.
Okay, no problem. Okay, no problem. Can you turn the sound off so I can?
They want to read. You can say, you've captured all their email addresses. If you want.
Okay, no problem.
Read my stuff. I'll send it to you. Send it to them.
Okay, all right. Well, thank you, WB. Let me move forward because we're losing people on the webinar right now. Okay, turn the sound off if you could. All right, you guys. I don't know. I'm in Florida. I've got Comcast business. WB's in Florida. I know that he's got a decent internet line. But at the end of the day, like you said, shit happens. So let's I can't really go over WB's slides because they're his slides, and he knows them better than me. But like I said, what we will do is we'll make these available. And like I said, there's going to be an offer here pretty quick here, and we'll try to clean this up a little bit. Now, I don't know if Tony's still around, but I'm going to move these slides forward a little bit. And okay, so anyways, we're gonna bring in Marlon Cobb. Marlon, can you come in? Can we hear your voice? Marlon.
Okay, there we go.
Okay, now you got it. Yeah, you're good. Okay. Jeez.
So the problem is that damn giraffe, April, sucking the bandwidth of America down. So April the giraffe, 231,527 people around the world have nothing better to do than watch a giraffe pace around in their pen right now. But I'm jealous to have that many people watching live. Be awesome. Okay, so just one more time. Am I clear? Is my volume good? Am I talking slow enough? We hear you, Dan, Chris. Good. All right. Mark it on close. Oh, so what I wanted to say is I don't want to blow Danny's offer up, but he's going to offer you some free access to everybody that you're hearing here today. So what we'll do is I built the technology, the trade chat technology that MrTopStep uses for the room. So if you guys sign up for that, come in Monday, and we can go through these slides with my audio stack, which is better than this one, evidently. And we can go through the slides and we can go through the MIM. So I'm going to talk really quickly about market on close stuff, because what I expect is going to happen on Monday. We're going to have a bunch of you guys in there, and we'll pace you through the entire close of the day. Okay. So anyways, market on close. Everybody knows what market on close orders are, right? In the stock market, on the New York Stock Exchange in particular, we're going to be talking about that. All my times are New York Stock Exchange times, so East Coast times, okay, when we talk about times. But at the end of the day, between 3:45 and 4 o'clock, market on close orders are starting to be paired off. That's what I'm saying. So big orders that come in, big orders cause big imbalances. They get advertised real time starting at 3:45 p.m. Eastern time, and everybody in the world is looking to see if they want to buy IBM because IBM wants to be sold by the teachers union or whoever, or some type of rebalancing thing. And so that's how the auction closed. And sometimes when the imbalance is too much, the market actually makes a move, and it's not a move based on technical levels or anything. It's just a move based on the mechanics of having too much stock in one place and trying to find the market, right? So if you have a large imbalance, the way you find a market is you lower the market, so price will go down. If you have a large imbalance on the sell side, that is, and if you have a large imbalance on the buy side, that is, a whole bunch of people want to come into the market at the same time, the way to free up the liquidity in order to finish those trades and to close the market out balanced, market has to float up. Okay, and we saw some pretty decent trades this week. This actually isn't my slide, but you can see the blue line here is the MOC numbers as they get reported. Let me just tell you, if you guys see tweets out, it says market on close imbalance, 3 billion or whatever, that's technically meaningless unless you know who the person tweeting is and how they calculate the market on close. There is no official market on close number. Okay, there is nobody that does that. Everybody, all the data nerds like me, calculate their own market on close numbers. Okay, so when you see the guys in CNBC doing it, they're getting their data from somebody. Just doing the stuff, but it's always changing. Okay, it's closing at 3:45. There's a number. At 3:45 and 15 seconds, there's a different number, and then there's a different number, and it's closing all the way into the close until eventually it becomes zero, and the market gets closed and balanced out. And again, we'll walk through the whole. Let me just change this here. And this is the time frame. Okay. When everything happens. So I trade only from 2 o'clock in the afternoon to 4 o'clock. That's when the market on close data is coming in. And we have access to early closing information. Okay, and again, we'll go through all of this on Monday with whoever wants to sign up and come into the room and trade with us on the MIM. So you can see 2 o'clock it comes, 2 o'clock to 3 o'clock. I'm kind of like judging. For me, I trade between 3 and 4 o'clock based on what the MIM is doing. 3:45 is in the important time. That's when the market on close orders are cemented. That is that you can put fluidly in and out market on close orders up until 3:45. Once at 3:45, you're committed to that order, and it will be filled at the close. The great thing about market on close orders is you have just as much power as Goldman Sachs or some other hedge fund, anybody else who's using the market on close mechanism. You'll get the same exact closing price as everybody else does. I'm not reading questions as they're going by, because otherwise I get distracted. I'm ADD that way. So save your questions for a couple minutes, because I'm only going to be a couple more minutes here. So you can see here, here's the percentage of the volume on a typical NYSE day, right? So you've got 2.5% of the volume on that very last minute of the day gets traded. So a lot of stock gets traded on the market on closes. The NYSE probably does about the best job of any exchange in the world. It's the most liquidable exchange in the world. You can trade stocks for cash. That's a pretty good thing. I don't know if you've ever been into illiquidable stock before. But sometimes it's hard to get the cash out of that stock. New York Stock Exchange guarantees you can do that. If you have the stock and you have the money for the order, they'll put the order through for you. Okay, so we're in unprecedented times. So it's always unprecedented times, but okay, we got this president we don't know how to deal with. We've got an economy that's expanded. It's overdue for a recession, right? And God, when was the last time we were aggressively raising interest rates? I can't even remember. So we've got all of these things kind of together, and I can tell you one thing, that we haven't been raising interest rates with the MIM before. So this is going to be all new and exciting territory. What we saw this week was probably some bond rebalancing. Okay, so you've got all these retirement funds. If you're going to retire in 30 or whatever, then you're high risk, and you got the low risk blend of bonds and those kinds of things. What happens is when that mix gets changed because stocks are going up, right? Bonds are going down because interest rates are going up. All of a sudden your 70% blend, 30% stocks, 70% bonds or whatever, is out of whack. So it has to be rebalanced. Okay. And those are the best rebalances for trading on the MIM, because it's money either coming out of another market that you're not trading, or the stocks, money coming in to the market. So it's a one-way trade. Sometimes you'll see these imbalances and you'll look at it and it's like, oh, well, it's kind of mixed. Yeah, it's a 1 billion, but they're also buying a lot, and it's and that kind of stuff. And that's just kind of shuffling around stock for stock kind of thing. So I really like it when money's either coming in or money's going out. So this is March 28th. This was just last week. And you can see that top line is the total imbalance, right? So 2:10 in the afternoon we start off, and we've got $282 million to sell. That's not a very big number. Okay, 220, it builds 473. Okay, now it's above 300 million. That makes me interested. I like above 300 million. 230, it's up to 683 million, right? Like it. Everything's growing. At 3 o'clock, we're now just shy under $1 billion, and I'm probably typing in we're going to go to $1 billion, because it's growing. Okay, the bottom two numbers that you see at the 3 o'clock, just kind of look at this 3 o'clock column here. Let me see if I can. Afraid to touch anything, to break anything. Oh, I'm terrible with this. So this 3 o'clock column here, there you go. Doesn't even point to anything. There you go. Those two numbers on the bottom, minus 91, minus 82, those are percentages. Okay, so we probably have got about 300 symbols that we have imbalance information for being fed to us. Okay, of those symbols, 91% or 82%, that's the bottom line, 82% of them have sell imbalances. Okay, market is being sold on the close. Okay, people need to get money out of the market. They need to get rid of stocks, and they need to get into cash. 91% of all the imbalances dollars, that is the dollars on the buy side and on the sell side, 92% of all the cash is selling. Okay, another huge bias. I'm very interested at this point. And I usually do, for my trading, I go in at 3 o'clock, I do a trade at 3 o'clock, and I watch till 3:20. And if it grows again at 3:20, and look at 3:20, it's 1 billion to sell. It's a little bit more. Minus 91, and look at that symbol percentage went to 83% of the symbols going. I like it. And then I'll do another ad at 3:30 if I like it. And there we go. Again, we're up even just a little bit more on the sell side. 91 on the dollar and 83 on the symbols. So a continuing growing MIM going all the way into the imbalance. I like it. And when I trade the MIM short, I trade to the close or through the close and try and capture the post trade. And sure enough, here you can see the volume picks up at the close right here. This chart doesn't really line up with that chart above. Here's the close. Here's the closing auction. This is where the computers are taking over now, and they've got to close this huge imbalance here at 1.39 million. And guess what? The way to do that is to find all the market on limit orders that all these people have put down in here and said, okay, I'll give you liquidity for your stocks if you're willing to lower your stocks down here, and the market on limit orders all match up, and and the prices drop down, and you go into a little sell into the close. So it's a mechanic of too many people wanting to get in or get out at this very specific time, which is when the market closes. Okay, and since we're in this aggressive, so I'm kind of excited about the MIM this year, because we're in this aggressive time frame, and there's doubt, and doubt makes markets move up and down and all around. I think we're going to see a lot of good MOCs at the end. We're going to see a lot of rebalancing being done as different asset classes change and those kinds of things. So I'm excited about that. I want you guys to come in. I like to talk about the market on close. We'll go real time through the whole thing, step by step. We'll look at some symbols. We'll talk about exactly what's happening. And I always tell people, I said, if you're going to trade at 4 o'clock in the afternoon, if you're going to trade in that last hour of the day, you better understand what's happening, because what's happening is everybody is thinking about they want to go home and they've got to finish their job for the day, whatever it is. I got to be in the stock or out of the stock and everything, and it's all going to come to a peak at 4 o'clock Eastern time. So if you have those moves at the end and you don't know what caused them, there was no news of that. It's no technical issue as far as a technical level, those kinds of things. You can look at the MOC numbers that you see and see if you can get some idea out of that. And Dan is, let me just tell you, Dan's a better trader than I am on the MIM. He has been with us for a long time. So thank you, Dan. Okay, so I am done like just rambling on. And again, please come into the room on Monday and we'll go through it. Is there any questions now that you need to know? Anybody? Did I lose everybody? God, someone just say, I hear you, so I know that I'm not dead. So, okay, so we're going to post a link. So I think John has a link, so you can. So the MIM is okay. Yeah, so I'm just the MIM. So the MIM is an indicator. Okay, it's a little gauge. And it's funny, I don't even have a picture of it. It's a little gauge that shows you these numbers basically as they're coming. So you'll see real time starting at 2 o'clock. You'll see what the imbalances look like starting at 2 o'clock. And then you'll get these kind of numbers in a chart. You can get a chart, you can get a gauge, and those kinds of things. So that's what the MIM is. The MIM is an imbalance meter. Market imbalance meter is what the MIM stands for. And it's a meter showing you the imbalances going into the close of the day. The MIM costs $99 a month for membership. We have a chat room built around it. We trade together. And the way the MIM works, okay, is there is no real-time data feed for market on close orders, except after 3:45 p.m. Eastern time. Okay, but we contract with people on the floor of the NYSE because the floor people have access to the market on close information early. It's called sneak peek because they're tasked with going around and finding. And it's a privilege, really, to finding the equity on the other side, right? So if there's a huge imbalance for IBM, and they see it as symbols, right? They see IBM, 1 million shares to sell, Verizon, 1 million shares to buy, and that kind of stuff. So they're out there trying to figure out who wants to buy 1 million shares so they can get their commission. So they have access to that. They feed us a sampling of that as fast as they can, and then we aggregate that. So they don't see it. No one sees it on the floor aggregated. Okay, they just see symbol by symbol what the imbalance is on a symbol by symbol basis. We take that data, we aggregate it together, we paint a picture that's unique to MrTopStep and on how the close is developing. I can do that, but I'll have to do it on Monday. Rob. The MIM on Monday was a surprise. The MIM on Monday actually had a sell imbalance, and then when the reveal came, we called 3:45 p.m. the reveal. It nearly evaporated. So there was some order gaming on the MIM on Friday. Remembering back now, and we do have the opening MIM, the market on open orders. We do have that. That is a real-time feed. And I don't trade that. I mean, maybe Dan trades it and he can share, but I tend not to do that because there's no real advantage because it's a real-time feed, so everybody has it. I like the afternoon stuff because it's proprietary to us, so we get to see the data, and there's not a lot of people that see that data unless they're with us. And I'm rambling. And Dan doesn't trade the morning too. Okay, so I'm gonna stop rambling, so that Danny can put the link up. I think maybe Tony's coming back.
Nope. Yeah, we're gonna bring Tony back in. He says he's got his volume fixed. But thank you very much for coming in, Marlon.
Right.
I think a lot of people are very interested in the MIM, and we're gonna have a lot of time to discuss that on Monday. But thanks for taking the time out. I know you had other stuff to do today. But anyways, listen. Let's try to get. Go ahead.
No, I was just saying, we'll see you guys all on Monday.
Cool. Thank you so much, Marlon. Anyways, we're gonna bring in Tony, and we're gonna get back to his slide. Tony, are you around? You gonna blow us up again, or what are you doing?
I'm hoping you can hear me.
Yeah, we can hear you.
Yeah, we can hear you. Oh, good. I can hear you too.
All right, hold on. Let's get to your.
Anyhow, as Danny said, was he was speaking earlier, is there we go. We've discussed this a lot in the past, and one thing that Danny taught me is you don't fade City Hall, and City Hall is basically the Fed. And what have we had since 2008? We haven't had low interest rates. We've had historically low interest rates, and Wall Street has always loved historically low interest rates. And what happened in December of 2015? The Fed raised interest rates 0.25%. What did they really do? They raised interest rates from historically low levels to historically low levels. And what have they done last December? And what have they done in March? They've raised interest rates another 0.25% each time. What have they done? They've raised interest rates again from historically low levels to historically low levels. The last rate increase, which was, I don't know when it was, a couple of weeks ago, the NASDAQ actually traded to new all-time highs after the rate increase. So at the moment, we are sitting with long-term and short-term interest rates at historically low levels. That is not bearish for the stock market. Everyone will say, oh yeah, but now they're on a cycle of raising interest rates. Yes, they are. But what are they raising them from? Even if we get 3 more rate hikes this year, where are rates going to be? Do you know where the 30-year rate, now do you remember the year 2000? Going into year 2000, that's when we had the bubble bust, the tech bubble bust. You know, before the bubble burst, the 30-year was trading like 6.5%, and the 10-year was around 6.5%. Today, the 30-year is 3%, and the 10-year is 2.4%. Interest rates, the 30-year and 10-year, these are historically low levels. And that, in my opinion, is not bearish the stock market. So I've been touting this trade since August of last year when I started buying June Eurodollar puts. This is not the currency. This is the 90-day security. And this works, if interest rates, these are dollars on deposit outside of U.S. banks. And because they're not in U.S. banks, you get a little bit extra interest on it. So you can see on Friday, the price was 98.71.5. So you subtract that from 100, you're getting 1.285% return on your dollars invested overseas. If they put up interest rates 0.25%, if they put them up 0.5%, this will fall, in line with that. So back in August of last year, I felt that the economy was better. I kept on writing to my clients, who's been on an airplane this year that's had a seat next to them that was empty? And no one. I had a client downtown Chicago. Supposedly, the record number of cranes in Chicago at one time is 43. At the moment, in the Chicago area of downtown predominantly, there are 38 cranes building in Chicago. What does that mean? That means the blue-collar worker is back to work. And guess how much he's making? He's making $50 an hour. My nephew is a cement finisher. He's dumb as a box of rocks. And he just put $50,000, about 6 months ago, he put $50,000 cash down on a house to buy a house. He's working overtime. He's making $50 an hour working overtime. The blue-collar worker is back to work. And what do they do best? They spend their money. So I personally think this economy is ready to burst at the seams. You go to any major metropolitan area, look at the building going on, the cranes. And he does work hard. He works real hard. He works real hard. Most construction workers work real hard. But you look around all these metropolitan areas, all the building going on. There's building in every major city. America's back to work. And you know what? And everyone's trying to pick a top. Everyone wants to pick a top. You know, and I know, and Danny and I differ on this. A lot of people are calling this the Trump rally. I don't think this is the Trump rally. I think this is a Fed-induced bubble, a Fed-induced stock market bubble. They have kept interest rates too low for too long. We have had basically a 0% interest rate, you know, Fed funds rate since 2008. What is it now? 0.75%. So when this economy truly, if the last two payroll numbers, you know, where the market, you know, exceeded expectations, 50 to 60 to 70,000 jobs each, or the last two consumer confidence numbers that were the best since 2001, and the last consumer confidence number was the best number since 2000. If the last, not the last Philly Fed number, but the one before that was the best Philly Fed number since 1984. If that isn't telling me that this is, we're not beating expectations anymore. We're going years and years back how good these numbers are. And this economy is ready to burst at the seams. And when it does, the Fed, they're going to be caught with their pants down. I'm sorry to use that expression, but I think they're so far behind the curve, and they are going to need to start jacking interest rates up faster than anyone is anticipating. Everyone's calling for 2 or 3 rate hikes this year. That's fine. I agree with that. But are they going to be a quarter, or are they going to be a half? Or are they, or, you know, I mean, a week from 6 days from now, we get another payroll number, and let's see where that average hourly earnings number is. The last two were below expectations. Let's see what this one is. And always remember, the market will move first. The Fed is always behind the curve. They will follow. With our last rate hike, 2 weeks before they raised interest rates, there was, like, according to the whatever, there was a 20% chance of us getting a rate hike, and all of a sudden, you know, boom, Philly Fed numbers, consumer confidence numbers, you know, payroll numbers, and it was 100%. It was a lock. So, as David Tepper said, right now there's no competition. Wall Street has no competition for investment dollars. None. Wake me when the 10-year gets to 4%. That's all I got, Danny. I'm long of these puts.
Stop, Tony.
And they're in the money. Tony. And I'm buying more sets.
That's what you call a floor trader. Well, thanks a lot, Tony. Let's zip through these final slides, and I'm going to make the offer to everybody. And hey, Tony, thank you so much. We'll talk email or on the phone tomorrow or next week for sure. But thanks for coming in. But anyways, you guys, look. I really wanted to get WB's slides going, but we'll get WB back in here. We just had to check his. I think we just have to work with him on his sound. And what I'm going to also do is I'm going to put all the links to all the stories in here. Hey, JD, can you put the links in for the stories and the slides? Okay, let's knock this off, you guys. Event-driven sell-offs, Garthman. Oh yeah, no. Okay, well I'm going backwards. Where are my slides? Hold on. Okay. We're going to do a quick thing on, well, that's the Trump healthcare pushback chart. We don't have a lot of time here, you guys. The snafus with the sound and everything, it just screwed things up. But anyways, I want to talk real briefly about the 10 handle rule. And I don't need to look at any of this stuff. because I'm the one that wrote the 10 handle rule. And I think the 10 handle rule is probably one of the most pivotal trading rules that MrTopStep has. Yeah, no stops go untouched, in the S&P, that's a good one and all that. But I really believe that the S&P moves in 10 handle increments. Now, I can go back and explain how this all came about. And it used to be the 10 handle rule was in the S&P when the S&P would only move 10 handles in one day. And how I came up with that, or how I contrived that, was that when I was doing the Union Bank of Switzerland program trading business in the S&P, after I would get done, I would get my first sell program off, I would get my second sell program off, but then the bids would start to build up. I get my second program off, I get my third, but by the third or the fourth sell program, the S&P would get so bid that the S&P would start to short cover. And when that happened, we would look at that low, we would call that low an inflection point, and in most cases, the S&P, after I would do 4 or 5, 3, 4 index arb sell programs, would make a low and then rally 10 handles off that low. Now the 10 handle rule with electronic trading has stretched the rule out. Some days the S&P will open up above the VWAP, it'll sell off 10 handles from the high down to the low, exactly 10 handles, and then it will rally another 10 handles up and then make another 10 handle rule. Now, I don't know how many people really follow the rule, but I think it's really, really something that you need in your trading toolbox. I'm not pressing you to take it, but I would just beckon you that while you're trading, pay attention to this. Look for 10 handle increment moves. 9, 11, sometimes you'll get 8 or 9, sometimes you'll get 11 or 12, but a lot of times you'll get exactly a 10 handle move. Now, real quick, I'll move this forward to just a couple of examples. Wednesday, March 29th, here you go. We made that 48.75 low, and then we went up and made that 58.75 high. Exactly 10 handles. I mean, this happens so often, it's almost silly. I mean, for anyone to really, I'm not here to tell people what to do, but for anyone to overlook this, I can't see how you could. Even if you weren't looking for it, I don't know how you couldn't see it. Now, I know that there's a lot of very, very active people that follow this trading rule, and there's one guy on Twitter that told me the other day that he's evolved his whole trading, the way he views the S&P, the way he trades the S&P around the 10 handle rule. And I know that in my heart of hearts that if I catch the 10 handle rule right, if I wasn't so nervous Willie, that I can make 10 handle trades all the time. People would say, oh, how'd you do today? Well, I made 7 handles on the upside on one trade, and then I made 6 handles on being short on the short sale. Well, you know what? That's great. I mean, but at the end of the day, these lows, when you get a 10 handle rule off the high of the day, and we've seen this lately in the morning, you get this quick little sell-off in the morning, and then you make a bottom, and then the bids start showing back up, the balances start showing back up, and then the S&P starts short covering. I know where the 10 handle offer should be, but what do? I offer up 7 or I offer up 6. And then I get filled up 7 or up 6, and then I watch it go another 3, 4, or 5 handles right away. And then all that's got to do is with just patience. But here, let me show you a couple. Rick F., I never ever saw anything like this before, to tell you the truth. It is less stress. I mean, if you can, Caroline, you're 100% right. If you pick that early low in the morning and you know exactly what you want to risk, you look for that double bottom, triple bottom formation that happens a lot of times when the S&P is sold off in the beginning of the day, makes it low, comes down, makes a low, goes bid, bid, bid. Looks like it's going to go. You missed the trade. No, you didn't, because there's always a retest that occurs after that low, maybe even a third retest. But we call that the Riley retest. And usually what I do is if I don't catch that first low, I wait for, well, a lot of times it'll make a low and then it'll pop up 2 handles and I buy it. That's stupid. Just be patient. Wait for the retest. Put your bid back in a quarter of a point above the old low or whatever, a couple ticks above the low. Let it come back and retest. If you're trading more than one lot, you may want to buy two. You may want to buy two when you lower your bid above the low, and then maybe put in a 2-lot bid below. So you're averaging out. But very seldom, if you're trading off that, especially if it lines up with the Globex low. Oh my God, that's really something. That the 10-handle rule and a Globex low, when they match, that is unbelievable. But anyways, Leo, I swear to God, it's the most consistent thing that I think I know of in the S&P 500 market. It's called the 10-handle rule. Hey John, can you put in the link to the 10-handle rule? We've got some rules that we wrote on the trading floor. Let's see what else we got. Okay, here's another one. March 28th. Made a high at 44 even, made a low at 33 half. It's just there. You just gotta. I'm not telling you to give up any of the trading tools that you have that help you make money. I'm just telling you to wake up to the idea that this is a reality. I mean, yeah, will it work every day? No, it doesn't work every day, but it works most days. I would say I was worried about when I was doing the webinar that I didn't keep track of enough 10-handle rules. I went out, everybody was sending me 10-handle rules. So I know that on Twitter, I know that in my forum, I know that outside of this, a lot of people watch to see the S&P and the 10-handle rule. Again, we consider the 10-handle rule an inflection point. It could be an inflection point on the downside. It could be an inflection point on the upside. But when you do these 10-handle moves, generally, you'll get this type of stuff. It's incredible. I don't know if it's got something to do with the algorithms or what. Okay, and here's another one. March 27th. Globex 23.27 half low. And then, yeah. Down to made the 27.5 down to 27.5 Globex low, down to 18 even. There's a 10-handle rule off the Globex low right there. And then if you bought into that, if you bought into that low at 23.18, like I did, I bought 23.20s. Again, stupid me. I know that there's always a retest. If you're going to trade, it's not just the 10-handle rule, but follow those Globex highs and lows, especially if the S&P is weak in the morning and you're off those lows and the S&P retraces and comes back down to those Globex lows, and watch the volume. Thin to win is another trading rule that I wrote, that you've got really low volume. The S&P is retracing its Globex low. It came down 10 handles. Oh my God, it's a perfect setup for buying. It really is. And it's almost so perfect, it's stupid. I mean, it really is. I see it.
Danny, it's Tony.
Yeah, Tony.
Do you know how I use the 10-handle rule? I will sometimes use the 10-handle rule as a, I kind of like the market in the morning, and whatever, and maybe I don't buy the low. Maybe I miss the low by 4 or 5 handles, but I buy the market well, and the market starts rallying. My target is 10 handles from the low. I may not catch the whole 10 handles, but if the morning Globex low is like 23.30 and I got long at 34, I'm getting out at 59.5. 39.5. You know what I mean? That's the way I will use it to my advantage, or the other way.
Yep. Thank you very much, Tony. All right, so let's finish this up, you guys. We don't want to lose any more people. Look, I'm very big on statistics. And as we know, the best 6 months are from November to April. Best 6 months for stocks, November to April. And April ends the best 6 months for stocks. But April starts out very strong. It's one of the strongest months of the year. I think it's the third strongest month of the year, or second strongest month of the year. So you got to be careful. I know that the S&P sold off going late into the day on Friday during the rebalance and the $1.4 billion for sale that the MIM had, and that was an incredible trade. I mean, if you followed any of these trading rules that MrTopStep teaches, the walk-away trade, which is when the mutual funds and the big investment firms at the end of the quarter, they've used up all their buying by 12 o'clock on 12 o'clock or 1 o'clock Central Time. You scale in selling into that time of the day, and then you wait to see if the mutual funds have used up all their buying like they did on Friday, and then the S&P goes Columba. So there's a lot of little things that we can teach people, and I admit sometimes I forget it myself because I just get so caught up in the crazy trading stuff. But I would say that you gotta watch April a little bit in the beginning. I do agree. I do think in here we're going to have some kind of big letdown, but you know what? Like Tony said, you don't want to fight the Fed. You don't want to fight City Hall. Well, as long as, Tony said they're historically low interest rates. Now they've gone up a little bit, but they're just up a little bit. They're still historically low. I mean, it's not going to change anytime soon. And what these low interest rates create is they create these stock buybacks. And when those stock buybacks going on, there's just money pouring into the stock market. You don't want to get caught up with that. You don't want to fight that stuff. But anyways, you guys, look. Here's the deal. I'm going to invite everyone that took this webinar into the MrTopStep trading room for 2 weeks for free. I know my people in the room are probably not going to like that, but I want to just explain something to everybody. We're a collective of traders, and we offer a lot of stuff. I mean, whether it be WB, whether it be Tony, whether it be Marlon, whether it be Top Notch, whether it be myself, we're a collective of traders. We're working together to try to make money and not get killed in the process. The MIM is a great tool. I understand. There's people that don't believe in the MIM. Well, you know what? Here's the thing. Let me explain something about the MIM. When I did all that, when I ran the world's largest S&P index on the Chicago Mercantile Trading Floor, I built that index operation. And part of my responsibility was to pay attention to big buy and big sell orders on the floor. I had that going through my desk. I look to the right, there's Salomon Brothers. I look to the left, there's Bear Stearns, there's Refco, all these firms. Prudential Base, Merrill Lynch, Goldman, Credit Suisse, on and on and on. But anyways, all those big firms used to do program trading. And at the end of the day, when these guys that did program trading, they usually sat next to a guy that ran a book, a long and a short book, long and short option book. And at the end of the day, that guy, if the market was marked against him, he would need to buy S&Ps to offset his risk. If the market was marked against him on the downside, he would have to sell S&Ps to offset his risk on the downside. That's the 3 o'clock cash close or the 4 o'clock cash close. Now, the thing about the MOC orders and the MIM is we offer you a look at the way these orders are piling in. Not in the last 10 minutes, not in the last 15 minutes, not in the last 30 minutes, not in the last 45 minutes. We can give that data for a full hour before the close. So the idea that people can't trade off of this information, it's ridiculous. I'm not saying that every trade is a winner, but I do know one thing, that the guys in the MIM trading room, they love it. They love it. And Dan B, I know he's been killing it in there, and this is no bullshit. It's not, nobody's making anything up here. This is real. So here's the deal. Take that link. I don't know how where's the link? Yeah, there it is. Okay. Take that link and go sign that thing up. We've never done anything like this before. And to the paid people in my forum, I got to say something. You are MrTopStep. And I know that some people may not like this, but at the end of the day, the industry itself is shrinking. People don't make as much money as they did or they used to. Most of the traders, these aren't young kids that are coming into our forum anymore. It's not like the trading floor in the summer where these young kids would show up looking for jobs. Hey, I want to be a runner. Hire me, D-boy. And then they go off and they get jobs at Morgan Stanley and they get jobs all over the place. It's not like that anymore. A lot of these college students don't even have the thoughts of coming out and being a futures trader or a day trader. They don't have that. They're coming out of college to be a coder. They want to go to work for Citadel. So what we do is we're involved, and I believe, I hate to say this, but a dying art. And it was part of I felt it was part of my responsibility when I went with the pit bull to go to his college and grab that for him and make a recording of it. And I make a recording of him sitting here, because at the end of the day, as more and more electronic trading hits this stuff and less human traders are involved, we are going to look back at this. We will be saying that these are not our own markets. And I think at the end of the day, with more computerized trading piling into this stuff, it's only going to get harder. But that said, I want to thank everybody for coming in. I think this is a great offer. We've never done an offer like this before. I think that if you pile in, Marlon's going to help you get in. It may take a day or a little bit of time to get everybody in, but I guarantee it. We'll have all the charts up. We'll have the MIM running. We'll have bookmap going. We'll have the imbalance charts. It'll be good for everybody. At the end of the day, we also want to learn from you, because that's what trading's about. It's about a collective of putting people together to share ideas and share everything, because it's just too big. It just is. And like I said, in the old days, we'd look up on the board, there's the number, we'd sell it. That's not how it works anymore. So I'm going to leave it like that, everybody. I want to thank everybody for coming in. I also want to apologize for the snafus. Like I said, John and I were on this morning at 7:30 or 8 o'clock in the morning. We tested everything worked, and then boom, we get on and everybody's can't hear. And we will get WB back. In fact, WB will be in the room, and maybe what we can do is we can ask WB to put those charts up and then do a special thing for you guys on Monday to go over those charts. I think that'd be the best way to resolve that. So anyways, everybody, I want to thank everybody for coming in. Again, sorry for the snafus. What we're going to do is I'm going to ask John to make sure that he sends the video of this out and all the links to all the stories. I think there's a lot of interesting stories in there that you're going to probably want to look at. So have a good weekend, everybody, and thanks for coming in. And sorry for the snafus. So, hey, before you go, where's everybody from? Where's everybody from? Tell me where you're from and what the weather is. DC, 2 DCs in a row. Chicago, 55. DC, a lot of DC, man. Mexico. London. Romania, great. North Korea. Wow. Iran. Come on. But anyways, really, how many people are going to take us up on the offer to join the room? How many? Give me a yes. Let's see how many people are going to take the offer. You got it. You got to. We charge $350 a month for the room. Come on, let's see. Let's go. Let's go. Yeah.
Look, hey, can you hear me, Danny?
Yeah, hey, WB.
Yeah, I just dropped back in because I wanted to get an email out to Bob Shalechi, and I was having the technical aspect problem. Look.
Well, you want to do your charts real quick? I mean, people will stick around. There's 200 people.
In fact, I can make this real clear now. Look, what you have in front of you is 2 weekly charts. One goes back to February of 2016. That's February 8th, and that.
Well, here, let's get the charts. Let's get the charts.
You don't need to. They're going to be in the room for free.
Oh, okay, all right.
And since they're going to be in the room, what you need to know, people, about me is I got 60,000 hours of screen time, and bottom line is I do top-down analysis. So you're going to see a weekly chart every Monday morning, and you're going to see them scaled down to 1-minute charts and passed out, because I also use a time component for day trade. And that has to do with cycles. And most of the people who subscribe to my crap, most of them came over from Avid Trader and a room in Manchester, England called KPAD. That is, I posted that as a favor to a guy named Rex over there for about 1.5 years. the rest are just people that come and go, see these freebies, read me a little bit, and then they go, oh yeah, well, at least I want that in my house. The bottom line is I'll take you from a monthly chart down to a 1 minute chart. You pick your time frame. Last week, using my Monday commentary, you could have bought 23.2150 and ridden it right up to 23.64 cash. If you think that the close at 23.57 was a friggin' surprise, well, it wasn't. It was told to you last Monday. That was the main price of the week. Just had to get back. This shit ain't accidents. You look at that weekly chart with all those cash prices on it. I got the MrTopStep in 2010, right when we were doing the May crash, the flash crash, which looks like a pimple on an elephant's butt. 78-minute chart now. And I've got all this stuff done, and every one of those prices on there was given in advance as a place you might want to be looking for things. And the first thing I said when I got here is once we've been through 1434, 44, the Bears haven't had a chance. But when we get to that big red 5 that's not up there yet, that's in that box, when we get to that and it finishes, then there's two things. We're going to correct the whole move back to 666 as some percentage with my minimum target at 1525. The other would be lights out. And that's the whole perma bear case about debt, and I don't want to get into it right now. But I will tell you this, just like I said in December, if Trump threads the needle going to 2717 to 2870, if Trump doesn't thread the needle going to 2467.5 to 2514. Right now, all we're struggling over, and it's the only thing we're struggling over, is on that 78-minute chart, and that's rather the 23.2150 actual low 23.18 is a sealed intermediate wave 4, or even, there's a more bullish count, but I always put up the most conservative ones, or is it going to become complex, and between now and about, let's say April the 17th, 18th, which is a 3-day weekend and taxation's due on the 18th, whether we're going to test it and break it one more time. And that's it. The only thing that I have, I'm just clever. I don't have any skill set other than 60 to 65,000 hours of looking at intraday charts back to 1981 and 84 with CQG, and then from 1990 on with TradeStation. But that's neither here nor there. If you look at that 78-minute chart, and I'll include them on Monday, you're going to see the Brexit, you're going to see the Trump, and I was here for all of it. And the bottom line is the only known skill set I have is I have almost a didactic memory recall for price. You know, if somebody says, where were we at the 2007 top of the third wave before the actual top, and I'll tell them, July the 15th, 1553.78. Where did it reverse? 1370 and change on the 1380 on the Ben Frankie surprise right before the options expiration. The top was the 5-year anniversary in October, on and on and on. And I can do this all day long. So anyway, that's it. And I look forward to seeing some of you in the room. I'm an open book. If people ask me questions, they'll tell you, Rob H, it's $29 a month, because and that's what you're really buying is my glossary of terms. $29 a month, you're really buying my glossary of terms. And if you want to learn the crap and pay attention, and if you come in the room for free for 2 weeks, regulators there will tell you, or you'll see it. They pretty much pay attention to some of the stuff I say, unless they have remedial reading problems. That's it from me.
All right. Okay, you guys. Are other people having problems with that link? I see Victoria's having a problem with that. Okay, Marlon's on the road. Let's see. Okay, if you have any problems whatsoever, excuse me, If you're having any problems with the link to get into the room, just email Marlon at MrTopStep.com. Okay? I just want to make sure that I don't hold on. I don't think it requires a credit card. Hold on. Oh, give me 1 minute. Oh, I guess it does. I didn't know that. It does require a credit card. Yeah, it does. But there's no charges, and we aren't going to be charging anything. The thing is that if you sign up, the credit card will not be hit. And if you decide to sign up, then we've got it on file, and you can just sign right up. So that must be the way it works. We have PayPal. We have PayPal on the website. I'll check my email for sure. But anyways, you guys, listen. I'm gonna hop. Like I said, I didn't know that there was a credit card required. But again, I'm not kidding. Nobody's gonna hit your credit card. Okay, Sonny, no problem. We're not out to charge anybody any money. But that's what you decide. That's totally up to you. No, you will not get charged. There's not going to be any charges sent through. There's no charges. That's okay, Leo. That's okay. Hey, thanks, TF. I appreciate it. Leo, here's the thing. There's a lot of moving parts here. I didn't know that part of it was on there. But that said, again, we're not going to hit anybody's credit card, so it's not. There's going to be nothing passed through on the credit card. So, anyways, you guys, listen. Let me hop. I hope everybody has a really, really good weekend. And my birthday is tomorrow. Yeah, April 2nd. Thank you so much. No charges. I swear to God, nobody's going to get charged. No charges. It's not. Yep, it's a scam. What are you talking about, Leo? Goofy. It's not a scam. We don't do. We are not part of anything like that. We're not part of anything like that. We've never been part of anything like that. And for the products that you do sign up for, here, let me get you on this one. Let's say that you take the free trial and then you decide to go to the room and you pay the $350 for the room, and then you use it for a couple weeks and you don't like it, you email us back, we'll give you 100% of your money back. We're not about taking people's money. It's not a scam. So anyways, listen, thanks a lot, you guys. I want to thank everybody for coming in again. Sorry about the snafus. I guess this is just, we try to get this stuff so that it goes smoothly, and it just gets, wow, like Marlon said, it's just Murphy's Law. But anyways, have a good weekend, everybody, and thanks for the happy birthdays. And like I said, any credit cards put down. We don't sell any information. We don't give out any information. We don't sell emails. And this is a totally free 2 weeks in the MrTopStep form. So have a great weekend, and thank you very much, everybody. We'll see you next week. Monday morning. I'll be up at 5:30. Okay.
Danny, it's Tony.
Have a good one, guys.
Danny, it's Tony. I want to say one last thing.
Okay, Tony.
Danny Riley is a personal friend of the best S&P trader out there, a man called Marty Schwartz, the Pitbull. When you're a personal friend of someone that respected, you don't scam people, okay? This is not a scam. This is a legitimate business, and Danny is one of the best S&P traders I have ever been around. He's not out to scam anyone out of their money. He's out to help people make money. Danny and I have been around close to, what do you got, Danny? I got 38 years. What do you have? 40. Danny's got 40 years. We know this business inside and out. We are trying to help people. We're not trying to scam people. Thank you.
All right, Tony. Thank you. Good man. Isn't he a good man? Look, so we're gonna cut it off, you guys. I'm sure everybody's got other things they could be doing today. It's beautiful outside here in Florida. I'm in the garage here. That's not fun. But I hope to see you guys Monday morning. Really, we're gonna have a good time. Really, we're press this thing out. WB, Top Notch will be in there. Everybody will be in there sharing, and that's what it's about. So we're gonna leave it like that. I want to thank everybody for coming in, and we'll see you Monday morning. No problem, you guys.